Following the global stock market has been a tumultuous ride for the last 6 months, and it's showing no signs of letting up. For those with investments and retirement savings, the news has been anything but good. But what set off the upheaval?
Every single index is down, actually.
Thomas Caldwell, chairman of Caldwell Financial Limited, says the turbulence in the economy has been caused by a perfect storm of human, governmental, and regulatory failings all occurring at the same time.
Some of them are well-intentioned. For example, everybody should have a house in America, so governments put tremendous pressure on banking institutions to lend money to people who shouldn't be owning houses. Coupled with that, you had we got rid of the old laws from the Great Depression where they separated investment banking and commercial banking.
Caldwell says combining the two made commercial banking much more aggressive in pursuing subprime mortgages, which gave a high rate of return. The result? The banking system lost liquidity, meaning the ability to convert assets into cash around the world. But there was more bad news.
Now, coupled with that, once you curtail credit, you had an economy that was generally slowing anyway. And once you cut credit, the slowing becomes a rout.
It's the confluence of all these factors that makes this economic downturn unique in recent memory.
These are tough times. You can't discount it. People are losing their jobs. You have tremendous curtailment in the economy. Usually you can have a financial crisis. It can stay isolated, as in the market crash of 1987. This is not only financial, it is Main Street or real economy type of, and they're ping-ponging off of each other. So you have to do two things: stabilize the financial system, which is actually the primary task, and then try to get the economy going.
But it's not just investment experts that are weighing in on the instability of the stock market. The World Evangelical Alliance issued a statement in the fall of 2008 calling the crisis a result of greed and saying too many trusted in a system that was all about making the most money possible. I asked Thomas Caldwell what he thought of that assessment.
Yes, there was tremendous greed, entitlement, and all the failings were existing, but some of the failings were well-intentioned, whether it be the housing thing or getting people to be able to consume and have products. But I think what we're going through is essentially a positive thing from a Christian perspective. I know in my own life, when I've gone through real crisis or difficulty, it's up to me to find out what the good stuff in there is and what I can learn and how I can change and how I can grow. And I think whether one is a Christian or not, people have a propensity to say, well, what did I do here? And often it's easier to blame other people. But if you go through this introspection, I think we can end up with a little bit better society.
Greed, the pursuit of wealth. Great loss, great gain. Can any spiritual good come out of the stock market? Investment expert Gary Houghton thinks it can, but says Christians should be pursuing socially responsible investing.
It essentially means that we as an investment management firm or the investment advisors that we hire to manage the money on behalf of our unit holders are looking for solid financial investments, but then after that they're also looking for companies that are the best in terms of environmental issues, that are the best within their industry in terms of social issues, that are leaders in their industry in terms of governance practices and policies.
Houghton is CEO of Meritus Mutual Funds, a socially responsible investing group that was birthed out of 3 Mennonite institutions. Many of their clients don't share their spiritual views, but still connect strongly with social and environmental concerns. So does investing with a conscience come with a cost?
The long-term studies show that a socially responsible investor will end up essentially on par with an investor who doesn't look at any of these issues from a financial perspective. But we think the socially responsible investor ends up with a far greater performance when you look at the social and environmental performance of their portfolio.
So what kinds of investments does Meritus avoid? Houghton says one's involved with tobacco, alcohol, pornography, nuclear power, and the production of weapons. But that's not all.
We also look at the policies that they have in place. We're looking at the way they treat the environment. We're looking at companies, if they operate on an international basis, are they taking advantage of people who have no other source of employment? So are they essentially moving in and creating sweatshops? Are they employing underage children? Where really we'd prefer them to be building the infrastructure of that company and making sure that the children are in school where they should be, rather than working in the factory for pennies a day.
And a small portion, up to 2% of all investments, are allocated to finance microcredit in the third world, giving unemployed or underemployed people a small loan to start their own business.
At a time when the financial return of other investments may be negative, to know that you have provided the opportunity for an individual to take one of their children off of a factory line because they're making enough money now as an entrepreneur. And in the case of one lady who was asked, what's the impact being of you having access to this cash? Her answer was, now I'm not beaten by my husband because I provide value. You know what, if we can talk about do socially responsible investments provide a competitive financial return, we can talk about the fact that some funds are down by 20% or they may be up by an amount. But when at the end of the day, I am more pleased if my investment allows me to say one less lady is being beaten by her husband at the end of the day than I am by whether or not my funds have gone up or down by 10 or 20%.
And despite the fear and panic heard daily in financial markets and media outlets, Houghton says this unstable time is really an opportunity to reevaluate what's important to us.
As much as we're fearful right now, I think we also need to consider, especially those who still are gainfully employed, who still can say, I won't outlive my money. We need to look around us at our local neighbors and our global neighbors and say, I'm so much better off than 90-95% of the world's population, and try to figure out how can we help them.
No one can accurately predict how long or how deep this economic downturn will go, but both Houghton and Caldwell say no matter where the markets are, the most important thing is to put faith and trust in a power that is greater than the economy.
That this is a difficult and this is a challenging time. But if I look back in my life, the Lord has never let me down. I've gone through things I wouldn't wish on my worst enemy. But all that notwithstanding, if I can just keep my eye fixed on the Lord. And, the best business book of all, is the Bible. I'm a very pragmatic person and a tough old trader. And so I'm only interested in what works, and I know what works. So I think if you just hang onto the Lord with your fingernails, your teeth, and your toenail, just hang on to the Lord, hang on to His garments, and you'll get through this stuff. And that doesn't mean to say you're not going to have tough times, but you will come out the other side.
In Toronto, Cheryl Weber, 100 Huntley Street.